Good evening, and welcome to tonight's market analysis. Let's start with the key signals from Wall Street overnight. The three major U.S. stock indexes closed mixed on Wednesday, but overall movement was minimal as the market balanced between the Iran deal and hawkish Fed comments. The Nasdaq finished at 26,021.66, the S&P 500 at 7,420.10, and the Dow Jones at 51,492.55, all essentially flat. However, futures diverged after hours, with Nasdaq futures up 0.4%, S&P futures up 0.08%, and Dow futures down 0.04%, suggesting tech stocks may outperform today while blue chips remain under pressure. On individual stocks, tech growth names generally faced headwinds. The QQQ Nasdaq 100 ETF fell 1.02%, the SPY S&P 500 ETF declined 0.63%, Nvidia dropped 0.8%, and Tesla slipped 0.34%. Bitcoin-related and leveraged ETFs saw even larger declines. But here is the key signal: the VIX Volatility Index plunged 7.32% to 17.09, approaching the 15 normal greed threshold, indicating a significant rebound in risk appetite. At the same time, the 10-year Treasury yield fell 0.4% to 4.45%, reflecting continued demand for safe haven assets, creating a classic stock bond bull scenario that usually accompanies complex interpretations of policy outlook. Now let us look at the global macro thermometer. The 10-year Treasury yield at 4.45%, declining yield signal continued liquidity easing. The VIX at 17.09, sentiment is at a normal low level, suggesting market panic has largely subsided. The US dollar index jumped back above 100 to 100.72, putting pressure on emerging markets. WTI crude oil edged up slightly to $74.15 per barrel, but faces medium-term headwinds. Spot gold fell 1.69% to $4,268.40 per ounce, as the Iran deal weakened safe haven demand while a stronger dollar created dual pressure. On the yuan, both onshore and offshore rates weakened modestly, but the movement was mild, with the pair still trading in a narrow 6.76 to 6.78 range, posing no systemic risk to foreign capital flows into a shares. On U.S.-China tech frictions, the Commerce Department issued new guidance requiring export licenses for advanced AI chips shipped to overseas subsidiaries of Chinese companies, aiming to close loopholes. However, these policies remain in the proposal stage and have not yet been formally implemented. For today's A-share market outlook, the Shanghai Composite is expected to open flat while the ChiNext board may show relative strength. The Shanghai Index has near-term support at 4,060 points and resistance at 4,130. The ChiNext board surged 2.05% yesterday to 4,252 points, directly benefiting from the Shanghai Stock Exchange's AI policy support for the STAR market. On sector focus, we are watching two main themes. First, AI and semiconductors, especially silicon photonics, optical modules, and computing chips. The exchange's review guidelines for AI model companies on the STAR market, combined with global AI momentum, make silicon photonics and optical modules the most likely active subsectors today. Second, power equipment and energy storage, as AI computing is driving demand for green electricity, with related names like transformers, high-voltage switches, and storage batteries worth attention. On the risk side, oil and oil service sectors should be avoided today, as the Iran deal restores navigation through the Strait of Hormuz, putting medium-term pressure on oil prices. High-valuation consumer stocks also warrant caution, as a stronger dollar may prompt foreign capital outflows. Northbound capital is likely to see net inflows today, estimated between 3 and 6 billion yuan, driven by improved risk appetite from the Iran deal, policy catalysts in A-share tech sectors, and stable yuan exchange rates. In summary, A-shares are still driven by their own independent logic, with technology growth and power infrastructure as dual main themes, and the ChiNext board likely to outperform in a choppy market. Our probability assessment for today stands at 40% for an up move, 45% for a sideways move, and 15% for a decline. Investors should focus on the tech growth and power infrastructure themes, looking for opportunities amid the volatility.